Now, as far at least as the prices of commodities are going, they have had a pretty rough ride of late. Oil trading at its lowest level of the year. Base metals weak across the board. Even gold taking a hit after becoming the world's investment darling. Let's get more on all of this with Jonathan Barratt from Commodity Broking Services. Good morning to you, Jonathan. Let's talk about gold first off, can we? It's fallen 4% plus in the last 5 days. Put that into context amidst all the fear that's been coming out of Europe. Why hasn't it been a net gainer?
Yeah, look, it hasn't been, mainly because people always held gold in case of concerns where they could get liquidity. And what we've found is quite a lot of liquidations occurring in the market due to those sovereign risk concerns. And as a result of that, gold has come under pressure. The other way to look at it is that people are seeing correct decisions being made. And with these decisions being made, people are saying, well, okay, adult decisions are being made, therefore, perhaps we don't need to have as much gold as. So there's certainly two sides to it, but at the moment I feel that the downside is pretty much limited.
Very interesting. Looking at some comments by a commodity analyst with Summit Energy in Louisville saying despite those agreements you've just talked about, the contagion is still there. This is not enough to stem those fears. And they're looking now at oil as well and saying, look, from 70 we could be making a move to below 50s.
Oh, look, I think the interesting thing is that the market is not favouring commodities at the moment. So there is this the air of saying, well, look, economic growth is going to be affected. But I think I've got to be quite optimistic here. You know, when you look at some of these commodities, sure, the economic growth is suffering a little bit, but there are adult decisions being made. People are turning around and we're getting confidence. Now, that confidence is shown first in the currencies. And in the currency, for instance, the euro, we've seen a very, very good bounce. Now, if people have confidence in the currency, then they must have confidence in the decision that these governments are making, and therefore they should have confidence with some of these commodities, because I reckon they're looking quite cheap.
How do you then explain the yen's gains against all the major currencies? That and the greenback are two of the most least risk-averse currencies.
Oh, well, when you look at it, with the US dollar, people move towards it just purely for that risk aversion. The yen is a slightly different currency. I think you've really got to focus on US and euro as such, perhaps the major issue. When people have concern on the euro, euro debt, euro concerns, they will fly to dollars. At the moment, you've seen a very, very strong bounce in that euro, 121.50 to where we're trading now. And in my mind, that's very supportive of the decisions that Europe is making.
All right, tell me about ETF buying meanwhile, Jonathan. Is that likely to kind of fill the void as these prices do slacken off? Buying opportunity big time for that space?
Look, that's what I think a lot of investors have to look at, that space. That is such a crucial area at the moment, just purely because the amount of gold which these ETFs are holding. The SPDR went up to a new record, over 1,150 odd tonnes. Now this is something which I think the industry and investors have to look at, because we're taking gold away that was traditionally mined into pure investments. Now, the investment for gold now is much, much wider than it used to be, say, 5 years. So we're going to get this situation where we don't have supply. If more people want to have gold as an investment, and that in itself, I think, will help gold on any dip. And why I think any dip can well be looked after as an opportunity to buy.
Yeah, well, we saw that dip in platinum and palladium as well last week, two of the worst performing of the metals. Is that then ripe for a bounce? Those two, are they then ripe for a bounce?
Yeah, slightly different when you look at the platinum and the palladiums. The palladium's more of an industrial precious metal. When you look at both of those, you can see that or particularly palladium, if you get that economic concern, people will savage the market. But if we get economic prosperity starting to filter back through, good confidence numbers, then you'll certainly see a rebound in that. One thing I do understand about the palladium and the platinum markets is that there is not a lot of volume, a lot of liquidity. So any large players getting out, and that could be as a result of the ETFs we talked about, you could see some very large moves, and that's what we've seen.
Do you also look at copper in line with those two, given the industrial use of that commodity and its link with China? Do they necessarily follow one another, or different factors at play?
Well, no. But copper is the interesting one at the moment. This whole concerns in Europe has caused copper to come under pressure. Okay, but when you look at the inventories in Shanghai, they're actually coming off, which means that China, who is the largest consumer of copper, is actually using those inventories, drawing down those inventories. And as a result of that, you can see that China's still primed in terms of its consumption of copper. And as a result of that, I think copper's looking quite attractive.
Yeah, looking like those inflationary pressures easing back in China. So thoughts of a hard landing, what, in your view, starting to ebb away?
Oh, look, we're more optimistic. We are going overweight in copper. We have positions around this 300 level. We're looking to add because we just feel that China's story has been overcast by what's happening in Europe. But when you start to look at some of the numbers there, they're still pretty good. And when you can combine that with some climatic concerns in China, you can see that the copper markets perhaps, or the metal markets, are starting to look positive, but also the grains, in particular your wheat, your corn and your soyas. We've had some very strong buying indication from there, so I would be moving into some of the grains and some of those base metals.
Yeah, annual corn demand set, I believe, to grow about 5% in China in the next 3 to 4 years, so certainly keeping a bid under that market. Jonathan, great to have your analysis across all those commodities. Have a great week.
No problems. Thank you.
Many thanks.